Okay, so let's be honest, folks. Finance can be a little bit intimidating sometimes.
Yeah, a little.
There's all this jargon and numbers, and frankly, it can feel like you need a PhD just to understand your own portfolio.
Yeah, true.
But hey, that's why we're here, right?
Hmm.
To break it all down and debunk some of the myths that trip up even the most seasoned investors.
Exactly.
And today we're diving deep into one that's a real doozy, this whole NAV thing with mutual funds. I know you've heard of it.
Oh, yeah.
Our listener today is curious about mutual funds, wants to make some smart choices, but keeps hitting this wall.
Sure.
Is a fund with a lower NAV like automatically a better deal? I mean, it kind of feels that way, right?
It's tempting to think that for
Yeah.
sure.
Like less money per unit, more units for your buck.
Right?
Sounds good to me. But I have a sneaking suspicion there's more to it than that.
There is.
And thankfully, we have some fantastic insights from the folks over at Certo Advisors. They're really great at cutting through the noise and explaining all this financial stuff in plain English.
I like.
So we're going to take their expertise and figure out why this NAV myth is so sticky and how focusing on it can actually lead you astray when you're picking your investments.
Very misleading.
All right, so I'm just going to say I'm the listener today.
Okay.
I'm looking at two mutual funds side by side. One has an NAV of end of year. The other one's got an NAV of 100.
Right.
I mean, come on, 10 sounds like a steal compared to 100, doesn't it?
Right. I can see why you'd think that it does seem intuitive.
It does.
But let's break down why that logic doesn't actually hold up.
Okay, yeah, please, because I am ready to buy that Euro fund right now.
Okay, so think about it like this. Imagine you've got two pizzas, right? Same size, same toppings, everything's identical.
Okay, I like where this is going.
But one pizza is cut into 10 slices and the other is cut into 100 slices.
Okay.
The pizza with 100 slices is going to have a lower price per slice, right?
Yes.
But you're not buying the whole pizza, you're just buying a slice.
Oh, I see what you're doing there.
So it doesn't really matter if it's cut into 10 or 100. What you care about is how good that pizza is.
That's a good point, yeah. It's about the quality of the pizza, not how many slices it's cut into.
Exactly.
Okay, so whether I pay 10 or 100 euro for my mutual fund unit,
Right.
I'm really buying a portion of the underlying assets, right?
You got it.
And the growth of my investment depends on how well those assets perform, not the NAV itself.
Absolutely.
Oh man, that pizza analogy really clicked it for me. I feel like I've been looking at this all wrong.
It's a common mistake.
So a lower NAV doesn't mean the fund is cheaper or that it's going to grow faster.
Nope, not at all.
It just means the fund's assets are divided into a bigger number of units. That's it.
Right.
Okay, so if I'm looking at, like, let's say a tech-focused mutual fund,
Sure.
if the NAV is super low, but all the tech companies in that fund are kind of struggling, my little slice of that fund isn't going to be worth much no matter how many slices there are.
Yeah, you're right.
But on the flip side, a fund with a higher NAV could be invested in, like, the next big tech giant, and my slice could be worth a lot more.
Exactly.
Man, I'm starting to see why this is such a common myth.
It really is.
We get so fixated on that price tag, but it's really just one small piece of the puzzle.
Yeah, just a starting point.
So if I'm really trying to pick a good mutual fund, what else should I be looking at?
You definitely want to look at the fund's investment strategy first and foremost.
Okay.
Like, are they focused on growth stocks, value stocks, or something else entirely?
Oh, right. Different strategy.
And then you want to see who's managing the fund, what's their experience, like what kind of track record do they have?
Okay, yeah. Does this person know what they're doing?
And then super important, think about the risk profile, because higher growth potential usually means you're taking on more risk.
Right. Higher risk, higher reward.
Exactly. You want to make sure you're comfortable with the level of risk involved.
Okay, so it's not just about the NAV. There's like a whole checklist of things to consider.
You got it. It's all about the bigger picture.
Just like you wouldn't judge a pizza just on the price per slice.
Right. Got to look at those toppings that crust everything.
So no more falling for the NAV myth for us.
Nope.
We're going to be savvy investors from now on.
That's the goal.
Looking at the ingredients, the chef, the whole shebang when it comes to picking our mutual funds.
You got it.
And speaking of being savvy investors, let's give our listeners one last nugget of wisdom.
Okay.
Next time you see a fund with that, like, super tempting low NAV, what questions should be popping into your head?
Okay, so first off, what's the investment strategy? What are they actually investing in? Then, what are the underlying assets? Are those companies doing well? Are they growing? And lastly, what's the risk level? Really think about that.
Boom. There you have it, folks.
Good questions.
We're not just looking at the price tag anymore. We're digging deeper, asking the right questions, and making informed decisions about our investments.
That's what it's all about.
So remember, NAV isn't everything. There's a whole world of information out there to help you choose the right mutual fund.
It's exciting.
Do your research, ask those questions, and happy investing, everyone.
Have fun out there.
All right. Thanks for joining us today for another deep dive, folks. We'll catch you next time.
Sounds good.
Bye for now.
Bye.